Hey traders, Nick here. Aftermarket Wednesday, bloody day in the market, but we try to make it exciting. So if you were holding something overnight bullish, clearly you came into losses unless you've got something like something from the XLP. So Walmart, I don't know if Lilly is in there, but it had a big day. It might have had news. So anyway, the rest of the market fell. 1%, 2%, depends on which index and ETF you're tracking. So what we do is during the day, I'm sharing my screens. What you're looking at is shared during the day. In fact, this, that, this, and that. So all the tickers we want to track, they're actively traded. We go down to nitty gritty, sub 1 minute charts. But today's video is about an interesting way we made use of the IWM and all the tools we have at our hands, and it turned into a monster win. So those are trades only for those who can actually trade fast, but the concept, like the support, resistance, breakout patterns, everything I say today applies at a much slower pace at any time frame possible. So if this chart wasn't a 1 minute chart, if it was a 1 day chart for like a year, it would have, I would say the same things at a slower pace. So I'm going to concentrate on the IWM, which is up here, and the RUT, which is down there. So we had the Fed freaking minutes today, right? Which is complete BS. They're old news. There was nothing that they could have told us that we didn't know. The givens going into the Fed meeting, all important Fed meeting event, which is not an event. The event was like a month ago almost. So we knew from that event and subsequent, I believe, 30 speeches by the people that were in that meeting. So there's nothing they haven't told us or expressed since then. So we know they're going to be aggressive, raising rates, combating price stabilization. They want to ensure price stabilization, which means fighting inflation to no end by raising rates faster than normal and a runoff of the balance sheet, which means, remember QE, they were buying 120 billion a month, and then taper, which is buying less than 120 billion a month. Well, now they told us that they're going to sell stuff. Instead of buying, they're going to be selling slightly under 100 billion a month. So nothing is new. All this we knew from 3 weeks ago. If not 3 weeks ago, 2 weeks ago. If not 2 weeks ago, 1 week ago. They all said the same thing. So there's nothing learned new. Yet, this is what happened around the statement. So this is where the opportunity came. This drop. And let me walk you through what we did with this drop. This is the IWM, the ETF that tracks the Russell 2000 index. The RUT is the actual index itself. The IWM is the ETF that tracks it. Earlier in the day, things were super bad. We tried to recover, and then we ping-ponged for a whole bunch of hours until 11 o'clock my time Pacific, when the meeting minutes were released. Hey, no, hey, no, hey, no. How did we make money? We made money. We had two big separate bets that worked out really well. And let me walk you through how we spotted them. So on this drop, I was looking at options, I was looking at shorter term charts, longer term charts, RUT charts, and a company called TradyTix. They offered a tool. They offer a tool. I'll put a link down below. They offer me a discount as well for whoever uses my link. So feel free to use it. Don't really care. But the tool, I don't pay for many tools. I would pay for TradyTix. Okay. It's like $50 a month. With my discount, I think it will be $45 a month, so 10%. But if I needed a tool to give me the edge, especially short-term trading, this is a tool I would pay. There are very few tools I would pay for. This is one of them, and maybe a harmonics pattern drawer, which is a lot more expensive. But that's definitely a tool I would buy. So what did it say? Let me show you some of the things we looked at. This is the window from TradyTix. This was the drop I'm talking about, this big red one. This green line up here is what their interpretation of what the machines are doing. So they call algo flow. It's a fancy term, in my opinion. I'm not from Wall Street, nor do I know the code, but I'm an engineer, so I know code, but not this code. But I know that the machines continued doing everything normally, and then the price did this. So I posted in the chat room, you can go back and see it. I had, by the way, 270 people and 276 people at this moment. And I said, this is BS. These are my literal words in there. And I would take longs in the IWM against what? Against a prior fail. So I said, it's falling into a prior fail. It should be a base, especially this, quote, divergence between what the machines are doing and what the price is doing. And this is the reaction we got back. So how did we trace it? And another thing, I also saw something in the options table. There was a big volume in the 201 puts. Well, price was well below 201. It was 199. So the only way the market maker can make money is if it rallies really fast. They collected $1. If it rallies fast, they can buy back the risk for 20 cents. Instant money. So I said, based on these two things and something else I saw in the RUT, I think going long would pay. There was one stint and it paid. And I said, I will repeat this at the breakout from here. And let me show you where. So this is 1 minute chart. Okay, so how do I come up with the extensions? Yeah, we were having a little bit of fun. That was Shimon. The first breakout happened right here, and I said this was the target, and it started playing out. And then along the way, the second breakout developed from here, and I put this, and I said this is the target, and then it played out. Boom, then fell apart. Right? That we had already closed the first stint, so I closed somewhere in the middle. And then I said, okay, I'm done for the day. And then this happened, and I came to here, and I was like, okay, so if they break out of here, that's the target. And given what I just told you, this gave us a good run towards 202. I said they will try to go for 202. And they almost got there. So the bets, it was 50 cents. So if you're doing options and you did one contract, that's $50 out of pocket to buy the RUT, that's the index for the small caps. The RUT 2025, this one here somewhere. So if you bought it for 50 cents, the person that bought it, several people bought it. One person fessed up, they sold it for $950. So they sold it for $950. So if they did one contract, they made $900 on the contract. Somebody else fessed up that they closed it at 250 or 300, so they didn't ride it all the way up. Perfect. Somebody said they booked 35%, 50%. So they were offsetting losses from stuff they were holding overnight. So the bad day suddenly is not so bad for them because they're actively trading. Not everybody can do this, but these comments are the same at any time frame. Okay, so that's just from one contract. In the IWM, the same bet was 22 cents or 7 cents for the 202 call, which turned into, what was the high? 35 cents. So if you did 10, you risked 70 and you got out with 350 bucks. Slightly smaller dollars, but equally as impressive percentage wise. If you did the more expensive one, you got more, much more. So anyway, so the point of this video is to recap what got us there. What? Knowledge of levels, knowledge of patterns. So this is some sort of a cup and handle. The bottom line is there was a catalyst here on the breach, and we knew that the target would be here. Before that catalyst here on the breach, target would be here. One target led to another. Combined with the Traditix help, thanks Traditix by the way, shameless plug, but they do good work. They seem like honest people. Anyway, I lost the whatever. I lost it. It was here somewhere on the page, the paste. So combine your tools, expand your toolbox. I don't have a lot of tools. Look, everything here is hand-drawn, and the rest were sideways. I'm looking at options. I'm looking at other tools from Traditix. I'm looking, if I had another tool, I would be looking at it. I was looking at harmonics tools. Nothing yielded. Maybe there was a harmonic on the 1 hour, but this is faster than 1 hour. So simple tools can get you there. What? Looking left. Looking left got me these 3 arrows. Traditix was just gravy because this was a BS drop. And so let's say I did not have Traditix. I would have made the same decision. I said falling into prior hard bounce level, the assumption is that that level will hold. until it doesn't. So I take a long and I stop out at X% loss, just like a futures traders would. And then where do I get out? That depends on your own self. I like to book early. I did book early, but I re-engaged for a second stint, which, by the way, we had done in the S&P earlier in the day. We captured, I forgot which run, maybe part of this one. Again, I left money on the table, but it was a good run anyway. But on the same principle. Same principle. There it is. That's the Trade Tick thing. Okay, so this is just one aspect of Trade Ticks. The rest is just so complicated. I'm still stuck on one page. That's the only page I need right now. Okay, that's it. Just 10 minutes trying to tell you to expand your knowledge and use levels. This whole thing started by me looking left with levels. That's it.